on Wall Street, or Liberty, or Pine, or some such street, Chicago, Atlanta, or around the nation, would you give yourselves a big hand? We're just delighted that you are here. Give yourselves a big hand. A big hand. I want to thank the co-sponsors of this two-day session. Sandy Weil, Chair and Chief Executive Officer of Travelers Group, Richard Grasso, Chair, New York Stock Exchange, Janice Johnson, Chief Executive Officer, Johnson Publishing Company, Dr. Emma Chappelle, Chief Executive Officer, United Bank of Philadelphia, Lauder Nicholas Lewis, Chairman and Chief Executive Officer of TLC Beatrice International Holdings, Honorable Percy Sutton, Chairman Emeritus, Inner City Broadcasting Corporation, and Leo Guzman, Chairman, Guzman and Company. We have some rather outstanding panelists with us tonight, and we were a bit hesitant at first, in part because so many people are downstairs trying to get up, and that's good news. Bad news, there was a crash of a small plane on the runway at LaGuardia tonight, and because of that, many planes have been rerouted in the area to Newark and Kennedy and other places, so some of our guests were on their way. Thank God it was not a big commercial airliner, so chances are the extent of the tragedy is small as compared to what it would have been had it been one of the commercial airliners. We thank and praise God for that. Also, the Honorable Carl McCall, who helped to organize this session, who will be here, but running a bit late. His advanced persons are here. And Congressman Charlie Rangel is likewise on the way. And so we want to express our thanks for their support and for their participation. I want to just briefly, before laying out this conference in some measures, express thanks to those who are here tonight. One, Irving Weiser is chairman of the Securities Industries Association, chairman and president. Give Irving a big hand, won't you please? A real big hand. The guy who is from Germany, who works with us every day, and he's John Utendahl. I mean, not really. People be, John Utendahl will write people a letter, and they are all prepared for this German guy to walk in with this presentation, and lo and behold, it's an African-American experience. Give a hand to John Utendahl. The chairman and publisher of Essence Magazine, one of our founders in this mission, Ed Lewis. And the man in the group who is the most bashful and the most retreating, the most self-effacing, Donald Trump. Before opening this session for the presenters to make their presentations and then to have some meaningful dialogue with you, and then the Drew Hill group, come on up here, Chairman Percy Sutton, if you will. Let's hear for Chairman Percy Sutton. Let's hear for Chairman Percy Sutton. Is that these 2 days will basically be days of intense work, focusing on trade, investment, development, ways to close the gap. We intend to have follow-up sessions in about 10 cities around the country coming out of this, again focusing on research and trade and investment seminars in the various cities, as it were, Atlanta or Memphis or Chicago or Denver or Houston or Dallas or San Francisco, as the case may be. What we're rather convinced of as we seek to raise the quality of the national dialogue to make this a more perfect union. The mayor of Denver just walked in. Mayor Wellington Webb, give him a hand, will you please? Is that for the record, there is no race gap. We should not say that anymore. There is no race gap. There is an investment gap. There is evidence of restraint of trade practices, which limits growth and creates an imbalance of trade. There are historical legal gaps, and they're structural that must be closed with structural solutions. Last weekend we saw 2 football games, Pittsburgh and Denver and San Francisco and Green Bay. And we saw players on the field, black and white, in bloody confrontation. We saw fans with such emotions they were out of control in cold rain with their shirts off, drinking beer, having big fun. We saw at the end of the game fans from San Francisco embracing fans from Green Bay, across lines of race, a kind of rejoicing. Why was there no race dialogue discussion there? Why was race a non-issue there? Because whenever the playing field is even and the rules are clear and the goals are the same height and there are no backroom scorekeepers, we all do well. The blacks had to run 12 yards for a first down, had to run 130 yards for a touchdown, and whites had to run 70 because they inherited 30. There would have been some fight on the football field. But when the playing field is even and the rules are public, we close these gaps, and we do so with a sense of joy and a sense of celebration. For too long, these real gaps of trade and investment have not been addressed. In many ways, the 54 Supreme Court decision does not address a trade gap. It addresses a legal gap. The 64 Public Accommodations Bill, the right to vote, don't address trade and investment gaps. And so why are we on Wall Street? Because if you want to go fishing, you go to the river. Want to hunt rabbits? Go to the bushes. Want some money? You come where? Want money? You come where? So we're here on Wall Street to discuss the money of the matter. That's why we're here. And that's why we're here to discuss the money of the matter. We're here discussing trade. What I want to do is open up in this wise. I had a good talk. I want some of this to flow kind of freely, and then I want other panelists to chime in. The reason I was anxious for you to be a part of this, Chairman Sutton, though you're sitting there, is that, Donald, you are the largest builder on the lower end of Manhattan. And for that, you are respected. Deal maker, comeback artist, you know how to put packages together. But there's no development on the uptown side of the same island between the same two rivers connected by the same bridges. And a fundamental question is, what are the impediments? And what incentives are required to expand the development? Or to put it another way, if one were flying 10 miles high looking down, and you saw a vast area of green, call it the downtown side of the Central Park, and the vast area of brown, but the brown or scorched area was not sand, it was topsoil. Logically, you would figure out a way to irrigate to extend the green, because if the brown is not irrigated, when it's parched and the wind blows, it will encroach upon the green. So we have to extend the green. But so far, we've chosen to build walls between the green and the brown rather than to extend it. So in the context of this family of friends who in a real sense are looking for how to make an urban development policy real, and you are a premier developer, what impediments are there between you and developing on the other side of Central Park, and what incentives would you require to make that happen?
Well, thank you, Jesse. First of all, it's a great honor to be here with you tonight. I think maybe before we discuss impediments, I do want to say this, and I think this is very positive. It really is happening uptown. It's starting to happen. Percy, who's been a friend of mine for a long time, has done such an incredible job, both physically with money and also psychologically on really showing what can be done. And I just want to thank Percy, because he was borough president. He was borough president when I was doing the Commodore Hotel, and I couldn't have done it without him. And he's just a great guy, and I love to see you, Percy. You look better than you did 20 years ago, I have to tell you. So you're doing something right. But it is happening in Uptown. And I have friends that, in this particular case, one white, looking for property in Harlem, wants to develop property in Harlem. And this is something that wasn't happening 3 years ago, or 2 years ago, or 10 years ago. It just wasn't happening. And, you know, sadly, one of the reasons is that it's very, very difficult to get land in other locations of Manhattan. And that's a sad reason to necessarily be going to other locations.
You said land is an impediment on the uptown side of the side.
No, land is very hard to get anywhere in Manhattan right now. And people are going to Harlem because they really see it as a new place to invest. I'm talking about the real estate developers, and some very good ones in New York. And I think you're going to see a big renaissance. I think you're already seeing it. And it really was led to a large extent with what some of the work that Percy and others have done. But I think you're going to see a renaissance, and it has begun, but it's continuing in Harlem and in the uptown, as you call it.
The reason I press this case is that in spite of the accolades that Percy Sutton deserves after being borough president 12 years, he had to go to 63 banks to borrow the money to buy WLIB. It's a question of capital. John Johnson said to me 2 days ago, the esteemed publisher of Johnson Publishing Company, for 20 years he could not borrow any money. He had to use subscriptions to sustain the financing. So a fundamental question, while there may be some purses here and there, what is needed to break the impeding forces to pursue green lining the red line zone on the uptown side of Central Park?
Well, I just want to preface the 63 banks. I mean, I wouldn't say the banks are exactly in love with me after what I did to those suckers. I mean, you know. So, Percy, I think that you're probably doing better. I think I might have had to go to more than 63 banks. There are things that can be done, and some are being done, I don't think to the same extent. If you look, you know, I have an honor of having Jesse at 40 Wall Street. We call it the Trump Building at 40. This is now a 72-story building right on Wall Street, right opposite the New York Stock Exchange. And he's a very tough negotiator when it came to rent, I want to tell you that. This man is definitely setting a new standard for paying low rent. But it's an honor. This is the toughest negotiator I've ever had.
It's called mixed rent.
That's right. I said, come on, Jess, you got to give me something. He said, nothing. I said, all right, what the hell? So he's tough. But the fact is that that building was built with incentives because the downtown, as we call it, the downtown market in Lower Manhattan has been given massive tax incentives for regrowth and rebirth, and it's really paid off. I mean, tremendous amounts of construction are taking place. I think that one of the things that you could do is go to the city and ask, and I really think it's important, ask for massive tax abatements for things that would be built in certain sections where you'd most like to see developed. And I will tell you that residential abatements and commercial abatements have a tremendous impact on construction. And I mean, I know all the taxes and I know all the tax rules, laws, and changes, and I will say that the 421 program is the same program on 5th Avenue and 57th Street, which is Trump Tower, as it is for Harlem. And Harlem needs more help than does 5th Avenue and 57th Street. So I think one of the things, and really the biggest thing in terms of an economic incentive, is real estate tax abatements at a large level and larger than other sections of the city.
Utendahl, you are a manager of money, have lots of, well, these are your roots. What's your response to Trump's assessment of either impediments and the need for incentives?
Well, I would agree that that would surely help. I think that right now, I think it's an interesting time when I'm finding financial marketplace is my business. I'm finding for the first time that corporations, when it comes down to raising the much needed equity that we all need to run a business, is a little bit more open to it by looking at the financial models that I think now can be applied to urban America. I mean, I think when you look around and look at the various financial models, they've all sort of fit the, they have all fit almost any area other than urban America. But what I've been able to sort of discover is that with financial models that now can be applied to urban America, there is indeed a availability of equity capital. And I think right now there's a big difference out here in raising debt. People need to understand that equity is what is really truly needed to actually fund your business.
Ed, before I come to Irving on this matter, I'm trying to get this as down as I can. When I come in New York, I see Manhattan, and I see two Manhattans. In one Manhattan, there are schools with condemned third floors. One Manhattan, there is vacant, valuable property. One Manhattan, I see boarded brownstones. In that same neighborhood, I see these able and brilliant people holding up a culture of great strength, but obviously something is missing. What's missing? Why is it that red line zone flourishing from your point of view as a banker and as a business person?
Well, as a former banker, I remember came out of Citibank, and like Percy, when I started Essence Communication with my partner Clarence Smith almost 30 years ago, if it had not been, for example, for Freedom National Bank, that's regrettably no longer here, I wouldn't be sitting here talking to you now about Essence Magazine. But it's always been about access to capital that we've always needed. And what I see being here this evening and seeing so many of you in terms of what we're talking about is really about opportunity and access. This is really the new frontier. Yes, in New York, in Manhattan, we have the haves, we have the have-nots. But I do contend today that I do think that the Citibanks of the world, the Chasers of the world, Travelers of the world are more open to the real possibility of providing opportunity because we have two societies, blacks and Hispanics, that represent really the extraordinary demographic changes that are going to be taking place within our society. We have money, we have education, and all we want is the opportunity to play in a game.
Man, Ed, you raised the point before I brought to Irving that Freedom Bank was there, and because it was there, you were here. Freedom Bank is there no more for Next Generation Ed. What was this difference between Freedom, a relatively very small bank in Harlem, and the big banks on Wall Street? What made the difference between Freedom had less money and you got more opportunity, and historically the banks here have more money but you've had less access? Interpret that so we can understand what you're saying.
Quite simply, the big banks, whether it was Chase or Citi, were not making loans to myself or others, people of color. And with Freedom National Bank, because it was in a community in Harlem, the then President Bill Hudgens made an opportunity for me to borrow $13,000 then to keep body and soul alive. But he knew me, he knew my background, he was willing to take a chance and took the chance and made the loan, which I'm not saying that any bank with regard to when you make a presentation to a bank, I mean, you certainly need to have all the credentials, you have to do your homework, you have to be able to tell the bank how you're going to pay them back. But quite simply, back in 69, 68, the institutions were not loaning monies to people of color. But Freedom made that opportunity available to us.
Irving, the point is, as we have pursued this matter, and you in the Securities Industries Association, as we look at markets around the world, Korean crisis now, it might shoot through Asia. But the largest developing markets in the world today is the Black and Hispanic market within this country, in terms of being accessible, $600 billion a year in terms of its size, more trained people, less risk, infrastructure's already here, and yet the resources of the securities industry, that resource base, continues to elude these scorched zones, these red line zones. What can your industry do, as you see it, to help begin to green line the red line areas and to close the gap and to offset the structural inequities that separate us?
Well, the industry has already started, albeit I would acknowledge a latecomer, and I don't think we'll dwell on that. But we started a diversity task force about a year and a half ago, which presented for the first time in the history of our industry association at our annual convention a study that they had done on opportunities in the communities that comprise our country, the New America. It is a task force that was started a year and a half ago, and it came really from two recognitions, I think. One, really the same recognition, and it all goes back to, I think, the same theme that each of us have spoken about, including yourself, I think, which is that our industry has always operated in areas where it saw opportunity. And I think that for, at least from our industry's perspective, and I can't speak for everyone in it, but at least what we are trying to do from an industry-wide standpoint, is to do a better job of explaining the opportunity. We don't regulate our members, but we certainly educate our members. And we have done some work in this area. We have published information, and we will continue to publish information that really explains the opportunities in two perspectives. One, the opportunity in the workforce, by making available information about the number of MBAs that are people of color or women coming out of our nation's universities, and how to recruit and where to go and how to access this important, very important resource, and how to get people into an industry who have not historically been in that industry. And we have started programs in that regard, and we will also, as you indicated, travel the country. We are talking, and we have plans for providing seminars and providing information. Our general approach to issues that we feel are important is to provide what we call best practices. And so we will provide information and provide the best practices of our member firms. Merrill Lynch and others have directors of diversity who have great experience in how to access the marketplace and recruit people of color, women, into their firms. The second is the opportunity that we see as an industry, and again, ours is an economically based industry, and we seek returns for those people who entrust us with their assets. And there, our focus is on, as Ed said, the enormous opportunity that continues with the affluence and the growing affluence of these different communities. And like Ed's banking explanation, we need to do a better job of understanding the unique needs of those communities and how to market to those communities and how to make sure, because we have an economic interest, if you will, make sure that we are marketing in a way that takes that opportunity. And I think the industry is very dedicated to provide both areas of education, that is, ways in which we can provide greater opportunity for many to participate in our industry, and also ways in which our industry can take its clients' funds. Remember, we don't invest, for the most part, our own capital. We have in clients who they want a rate of return, and we need to find ways in which we can outreach to both of those marketplaces and both of those communities.
I want to raise a point. Historically, your industry has practiced patterns of exclusion. And you have this 180-degree emphasis, it seems, 180 degrees, on diversity. And you keep using words like the marketplace. What's driving you in this direction? Is it morality? Is it fear? Is it market, money? What's the new shift? What's driving it?
Well, I think there are two factors. I don't think it's exclusively one or another. I don't think it would be one or the other. I don't believe that morality alone will drive this issue for an industry that has for hundreds of years been an economically based industry. But I don't believe that simply economic opportunity without a commitment to doing something that makes more sense in our country and that helps advance issues that are important to the welfare of our country. And I think you need the two hand in hand. But I don't think either works without the other. I can't speak to what practices were in the past. I've been in the industry for 12 years, and I can't tell you that what they were in the past. I can tell you that there is a great commitment today on the part of many firms. Altruism alone will not drive the levels of investment, I think, that are required for this to work. There's got to be an economic incentive in the industry that we operate in, as in most industries. But I believe there is a sincere and a dedicated commitment by many people in our industry, certainly myself included, to address some of the issues that need to be addressed in our society.
The reason I keep driving this, I know your association just did a film on diversity. And in that film, various segments of the marketplace was making the case why you needed diversity to make them respond. Many people look upon the issue of diversity cynically. Why is this issue of diversity in marketing important to your industry association now?
Well, this is an industry that requires people working in it who are the best and the brightest. And I would start by saying that it is an industry that is desperately searching for ways to compete, to recruit and retain the best and the brightest people that we can in our industry. The securities industry, by and large, is a human capital business. Our firm doesn't compete because we have more capital than a Goldman Sachs or a Merrill Lynch or Travelers or what have you. We compete because our people are better than somebody else's people. They're more knowledgeable or what have you. We have today in our country almost 14% of the MBAs coming out of our country are people of color. That is a huge increase, I think almost double of what it was 10 years ago. A rapid, more than double actually, it's a large increase. I think the rate of growth, I don't know the numbers off the top of my head, but they're huge. That means that if we aren't proactive in this sector, we will lose out on the opportunity of recruiting, at least in that 14%, and God knows beyond when you get into our colleges and universities and other places. The second aspect of it is that, as Ed pointed out, we have a very growing affluent society in the African American and the Asian American and Latino communities that we are in the business of providing services to. And those who understand these issues best and who do the best job in marketing to those constituents will have a competitive advantage over those who don't. So I think ours is probably the clearest, I think, industry where we pay for performance. It's entrepreneurial. It's people from a variety of backgrounds who really are using human capital and their ability to access new and unique opportunities. So I think it actually fits better in our community, in our industry, almost than any other industry possible. And the demographics, I think, are clearly driving on both the workforce and on the marketplace or customer side.
Ed Lewis?
I think people really have to understand and come to grips with that African Americans are not going back to Africa. Hispanics are not going back to Central America. Asians are not going back to the Filipino, Japan. We're all here as Americans, and what we want with regard to the schooling that we have, the talent that we have, is to have the opportunity. So it's in everybody's interest, self-interest, to want to tap into this extraordinary market that we have before us. If you believe what demographics are saying with regard to how the society is going to look, blacks, Hispanics, and Asians may represent half the population in the next century. What are we going to do with these people? We need to provide opportunity. We need to provide access. And that's why we're here this evening, and that's why what you're doing is so extraordinary. We need to keep pressure.
Let me ask you, Don, the question before I really throw this open. The Percy Sutton and Wellington Webb, who should be here. Again, Wellington, I keep driving the point at Donald because so I'm rather convinced that, Don, you need growth, right? You need to grow?
Not necessarily.
I asked the question to the wrong guy. How do your business requires a growth market?
Well, I guess, you know, business is a game, and we all like to play the game. And in terms of playing the game well, growth is nice, but sometimes there's something nice about sitting back and enjoying what you've done also. I could use a little bit of that.
You're already over the mountaintop, Don. You don't fit this. No, I think that the real point here is that these markets that Irving keep relating to, these markets are growing. You mentioned that there were some factors relative to the need for tax abatement. You gave me the clear impression that there are incentives on one end of Manhattan, but not on the other end. Is that true?
Well, there are incentives on all ends of Manhattan, but certain areas of Manhattan need greater incentives than others. So that 57th...
That is a very nice way to put that, Don.
Yeah. 57th Street and Fifth Avenue doesn't need the same incentive as 125th Street or other areas in the city. And yet the abatement program is pretty uniform throughout the city, which would seem to put areas that need the help in a great, to a great disadvantage.
Now, John, that goes to the heart of the question of a development formula. Because if everything is seen as equal and it's not equal, it amounts to ham and egg justice. You know, it sounds even and smells even and even blends, except whenever you put the hog and the chicken on the table, the hog always votes against it, and the chicken votes for it because the chicken just drops an egg. And the chicken drops an egg and moves on. The hog has to drop a leg and can't go any further. And so in a real sense, what Donald said is that with this notion that the 57th and 125th is on the same standard, that something is missing there, there are various development formulas, John, that are applied, whether aimed at Europe, at Eastern European development or South African development. In terms of a development formula that takes into account the crevices that Don suggested about the uptown side of Manhattan, what would you see in terms of a development formula that took that into account?
Well, when I spoke earlier about the financial models, clearly, if in fact you can get real estate and you're trying to set up a business, and the real estate you can buy for a spit, that's going to make a big difference in what your returns are going to be. So, didn't mean to say spit, but
I understand.
I think that if you can get some tax breaks, it's going to go a long way. So that needs to say I can't really add to that. There are other factors, I think, that come into play with just the density that exists of consumers up in the urban areas. As Ed just alluded to, the Census Bureau said 1 out of every 3 Americans in the year 2000 are going to be a minority. And that's a big number. And if you look at just the growth in urban America versus suburban or rural, you're a fool not to think about taking advantage of the marketplace that exists there.
Chairman
It is
Sutton.
formulaic.
I want to ask Chairman Sutton, who has been in Harlem for quite a while and was former borough president and therefore has seen the whole spectrum of the island. Chairman Sutton, to my recollection, there's not a new car dealership in Harlem, is that right? There's not a car dealership. Is there a chain, a grocery chain store there? Not one grocery chain store there, not one car dealership there. Same island, connected by 2 bridges. What's happening? He needs a mic. We need a sense of what our object is, to try to green line this red line zone. What's missing, please?
Reverend, much of it is historical. And when we talk about redlining, when we talk about crevices, if you will, within a community that might need more incentives, what you have is a long history of a community being abandoned by the larger society. Then you see multiple efforts going forward over the last 20 years to help cure that condition. Unfortunately, during the course of all this time, a lot of housing is abandoned. A community becomes regarded as not a nice place to be. And as a result of this, and since there are no new incentives any different in Harlem than there are on Fifth Avenue, as Donald Trump said, the question is, how do you make people move to a place, since everybody is economically oriented, when I say everybody, persons who are in the business of making money, don't mind being nice in the course of making money, but the money is the objective. And the question is, how can you get people who want to make money come to an area where you can convince them, so that you can convince them they can make money in that area and benefit that community? That can be done by incentives. That can be done also by diversifying the developments. Now, for example, Donald Trump, if Donald Trump decided to come into Harlem, Donald Trump's name alone, if he were to identify with another builder and say, I'm going to take over 10 blocks in Harlem, and we're going to structure a series of buildings, we are going to charge even more per square foot, that is likely to be a success, because he is someone of great ability. Persons know about him, and there's sort of cachet about Donald Trump that will permit him to go into areas like that. But Donald Trump will need persons who identify with that community. So if you could pair people,
Partnership.
just as in the investment community, investment banking community, if giants could partner with Hispanics, with Asians, and with blacks in the course of their development, all could expand.
Let me cut this another way, Donald. When we expand into Germany, we got a German partner, or into Italy, an Italian partner, or France, a French partner. The sense in which it's not enough to invest, but to engage in partnership for long-term development is the point that Percy Sutton raises. But there's another point implicit in what John Utendahl said about this question of formula. Some years ago, Ralston Koski, who was then House and Ways Means Chair, went to Poland. He's a Polish American by ancestry, and tried to call back to Washington. It took 5 or 6 hours, and he couldn't get through on the phone. Just the infrastructure had rotted. He said, no ally can develop under this arrangement. You don't have a trade formula, you don't have infrastructure. So he came back and structured something called the Polish American Development Bank. And on that bank are 6 Polish American citizens and 2 Polish citizens. We make to Poland $240 million revolving account, $60 million for Hungary, 40-year loans at 3/4%, first payment due in 10 years, called concessionary rate loan, but a development formula. The rationale being, if we develop our ally, we expand our own market and cement the alliance. That's a formula. Even now, there is a development formula, which I want you to respond to, Charlie, for South Africa. A $100 million fund was set aside for South Africa, for black South Africans. Today, the persons on that board can make a $5 million loan to a black South African, but there's no comparable structure to make that same loan in Denver, in America. So when you suggest that there is 57th Street, 125th, but there's a crevice of sorts, and when Utendahl hints at that same thing and Percy Sutton says that, then maybe this question of urban policy does have to drill with the question, Charlie, since you own House Ways and Means. The context of this, Charlie, was simply this. There are 2 islands. There's one island, uptown, downtown, between the 2 rivers, connected by the 2 bridges, yet one is greening. In many ways, one is parched or browning because of some gap, real or imaginary. What can we do from where you stand? And I guess your other angle is, what can we do to green line the red line zone and the price we pay if we don't? Let's hear it for Congressman Charlie Rangel that just got here.
Thank you. In following the trend of discussion, Reverend, I would suppose that you would do for an undeveloped community in Harlem the same that you would want to do for any underdeveloped country. The fact of the matter is that if we're going to expand our markets, we have to have people with disposable income. That means that job opportunity has to be there, and training skills has to be there as our investors look for a return on their investment. In a week or so, I will be visiting Cuba with the Pope and the Cardinal, and I asked my State Department, in the course of this spiritual venture, what might I ask our friends in Cuba to do so that we'd normalize our relationship under the cloak of this spiritual visit? One of the things the State Department said that I should demand that they release political prisoners. I said I would feel very comfortable in doing that, but what would happen if Castro asked us to release our political prisoners? We go to the marketplace as the leader in world trade with more Americans locked up per capita than any country in the free world. 1.6 million and growing. No developing country and no community can afford to see its prison system lock up productivity and its educational system bog down. When we talk about investment, it is not for the developing country, it's to get a return on our investment there. To get a return on the investments that are African American and minorities, it would seem to me that the voices of business would have to be able to say that we lose our competitive edge if we find that drugs are substituting for hope in the United States of America. So in short, I would say, for anyone that is looking to make an investment, the same thing that they would look for in a foreign country. Remember, 1.5 million people here could have disposable income and could be consumers too.
Mayor Wellington Webb, before we open this up to the floor, because our mission tonight, and we're so glad to see you here from all around the nation. Now you as mayor preside over it all, as it were, both ends of the island. But as we travel around the country, there's this search for a formula that applies to the undeveloped zones. What leeway do you have as Chief Executive Officer of the city to green line the red line zone? And do business leaders get the point of the cost of not doing it?
Not without a revelation. That normally comes in the form of that that in our city, we place city money in banks that follow city priorities. We also have as a value that we're not shy about saying that we believe affirmative action is wholesome for America. We also believe that we tend to try to do business in our city through public-private partnerships. I think that part of this conference, Reverend Jackson, and what you're trying to do here also hopefully would lead to a larger question. I think in order for Congressman Rangel and many of the people sitting in this room, I think it also speaks to the point that we lack a national urban policy that places direct emphasis on cities and how we revitalize cities. And I think that when we talk about what goes on within the securities industries and others, some of us have been around long enough to know that in the one sense we try to, security firms will invest with cities when they build large projects and send African-American sales personnel. If the mayor happens to be African-American, the mayor happens to be Hispanic, they send someone else. But the lack of partners in the firms are also obvious. And then after the business has been attained, or those individuals then go off into their own businesses, then we find there more diversity and a need for inclusion. And I think part of that's market-driven as we look at new markets, we look at African markets, we look at Latin American markets. But I think, in closing to the question, that I think as a mayor, every mayor will use whatever is that they have the latitude, whether it's through urban renewal authorities, whether it's through tax increment financing, or whether it's building partnerships. But I think that the tone has to be set at the top, both on the public and private sector.
Do you think this drive, the green line, the scorched zones, will be led by the private sector or the government?
I think it has to be both. Private sector is not going to do it unless they see something in it for them. And secondly, they're not going to do it unless they see something that might be taken away from them. There may be a few that may do it that are already over the mountaintop, so they don't have anything else to do.
Oh.
So that...
the reason why I think that answer must go a little deeper, Mr. Mayor, is this. It seems, for example, and I thought that Irving was going at it, is that you take the speaker, his power is based upon recycling strength in a given district. He does not need growth. He does not want annexation or too many new voters. His strength is not in growth. His strength is in control. And the longer he controls that small spot of territory and can offer a tax bait in New York and a cultural bait in that district, then his power rises. On the other hand, Donald and Irving need growth. After we came out of the deficit with growth, not with tax breaks, I think. I think we grew our way out of this situation. Now, and I am rather convinced, and Charlie, you are the mayor challenge this, that the private sector must take the leadership, and the government will follow it in rebuilding urban America. That's my premise.
I truly believe that it has to be the partnership. The private sector is going to look at the balance sheet. There's no social services on their agenda. They respond to stockholders. But there's no reason why the government cannot provide those incentives to make those investments more lucrative in the areas in which we want to direct our
Assuming there must be a private government partnership, who will assume the leadership to make it happen?
You know, it really takes people that have the courage of a Donald Trump to know that people like Trump are not going to be intimidated. That people like Trump can decide what they think is good for America and have enough self-confidence that they're going to make it. And people like Trump will know that if the green part of Harlem and East Harlem and Washington Heights was to find itself going anywhere near Trump Tower, he'd have a problem. The idea is to have Trump's presence throughout this island and the Trumps throughout this country to provide the leadership in saying, I am not involved in social services, but if you want me here the same way you're inviting me to go to South Africa, show me how I can make money, because wherever it is, I can be successful. And that also means that the Trumps are going to ask, if we come up there, what will the school system produce? What would the health system produce? What will the crime situation be? Can I make that dollar, or do I become a social scientist? And then the mayors come forward and say, we want to be your partner. We know that we can't do your job as well as you can, but we can make it easier to promise you that you will have a labor market second to none if you decide to come to our town. And that's what the empowerment zone's all about. But it is a grain of sand on the beach to talk about empowerment zones, when, as the mayor said, we don't even have an urban policy.
Well, Charlie, let me cut this another way before we got Donald on the spot here.
No.
The reason why I'm trying to keep Donald and his group on the spot is because when I was growing up in Greenville, South Carolina, one time there was two drunks on the railroad track drinking wine. Having big fun, the more they drank, the better they felt. When they got really in the twilight zone, one said to the other, I believe I'll buy this railroad track. Other said, don't think I want to sell it, have a drink on me. Now, Charlie, until the man or the woman who owns the railroad and the train is at the table, they just talking trash. Whether they drunk or sober, they just talking trash. It seems to me that what's missing in this equation is that those who stand to gain if there's development along the track, and lose if there's danger in the curve on the track, that they are absent in this equation. It seems that we feel the absence of Wall Street, as it were, in this equation to extend the profit zone. I'm not convinced that the guy whose strength comes from recycling his district and keeps getting reelected perpetually has an interest in developing Harlem or Denver or Chicago. On the other hand, I'm convinced that developers do. And developers have the interest in standing to get the most gain, then why can we expect of them, Donald, to take some lead, even in convening their governmental allies, to create a formula for you that makes it a profitable proposition? Why can't we expect that of you?
Well, I think we can expect it of government, and I think to a certain extent government does that. Jesse, I think they've done it in downtown Manhattan. I think they've done it in midtown Manhattan. I think they've done it to a lesser extent in the uptown sections of Manhattan.
Much lesser. And the point, if we keep driving this, of course, obviously, is not to embarrass you, but to bring out something that's missing. There's something missing here, Charlie. It seems to me there's a formula factor, because after all, there's no race gap, but there is an investment gap that's quantifiable. There's a trade deficit that's quantifiable. There's an imbalance of trade that's quantifiable. There is a less investment in the schools that's obvious and quantifiable. What can we do, Mr. Rangel or Ed, what can we do to close the quantifiable gap that keeps the playing field tilted?
You know, I take liberties with Donald Trump because when he sees government not doing what they should be doing, he has no problem of going in there, whether it's a skating rink or whatever, and getting it done and taking credit for it, and it goes unchallenged. But who better than a business person can complain when they pay high taxes in our cities and find out that it costs $85,000 to keep a kid at Rikers Island and $7,000 to keep him in school? At some point, our business people are going to say that they're not getting a return on their investment. It could very well be that as we see the booming industry, that prisons are forming in every major capital throughout the United States of America, where state legislators are fighting for their prison the way many of us fought for our military bases, whether there was a need for it or not, that until the business community comes together and recognizes that America cannot move forward as an international leader any further than the number of people that are being educated or the number of people who look alike that come from the same community that are being incarcerated. And this cannot be ignored when those numbers are growing.
But Charlie, you kind of symbolize, before we throw this open for a little while, and then we're going to have a reception, if you will. Welcome, Reverend Chopper. Is this. There is now about to be a bailout of South Korea. South Korea has 1.2 million car drivers, and they are exporting 2 million. So obviously, they plan to export their way out of that hole. We sell 8,000 cars a year to South Korea. And yet our business leadership has taken to a less literate and smaller population infrastructure investment in roads, sewers, bridges, plants, indeed pension fund monies. And now we plan to bail out a corrupt, unaccountable, political, economic family. And we speak of without reservations. It may be $20 to $50 billion, but we kind of got to do it. I just did not hear those kind of monies for a bigger, closer, safer market. What's missing?
They have no investment to protect here. The protection of Korea has nothing to do with love and affection for the Korean people. It's to protect the investment they have in Korea and in Asia. And if we can get them to include us as a part of their family, then collectively we would be protecting each other. Wouldn't you think, Donald?
Well, Charlie, before we open up, because the reason I'm going to drive this is because we cannot be irresponsible isolationists and say ignore Korea. That would be ridiculous. That's not the point. The point is that if we look at the people in this room as a market, not just as a domesticated a domesticated group of captives, but as a market, that the incentives, it seems, to invest in this market, whatever they are there must be here, whatever they are there, because this market has more people, more money, more trained people, more MBAs, more accessible, and we'll pay a price if we don't do it. Who do we look to make that much sense in this redirection of the investment to green line the red line zone so we can all be in the black, since we're all in the red, green, black?
Well, to be the devil's advocate, I would say that you have a problem, Reverend Jackson, because there's $1 trillion involved in the prison industry and keeping people in jail. That is an industry that has support of the health industry, the clothing industry, the food industry, the service industry, the construction industry, the political families, and state legislators. And we find those African Americans and other minorities that were able to dodge the pitfalls of drug, alcoholism, and miseducation, they are buying. So that consumer market is there for them. And the question has to be weighed in losing the market of the people who are underemployed, unemployed, or incarcerated. Are they really making up for this with our police department, our judges, our court system? There are billions of dollars being made locking up people. Now, I'm not saying that that's the moral way to look at it, but we're talking about markets and who's making money. And I can tell you that if you were to listen to the debates in state legislators, it was, didn't you get your prison 2 years ago? It's time for me to get mine.
Irving, what can be done to shift the incentives to creative building and the urban policy that Mayor Wellington talked about, knowing your industrial allies as you do? What can be done to shift the incentives from Charlotte's reality to the reality that we like to think of as being the dream? Then we'll open for questions and start jotting your little notes down and ask some questions. We're going to take about 30 minutes of Q&A, and then Drew Hill going to do the so forth.
We're back to me, though, right?
Back to you.
For starters, I took Donald's growth, so we're in good shape for the next 10 years. And I think there is reason for optimism. And I guess I would, since you're going to go to the questions afterwards, we have a country that the demographics of our country going forward, I think, will create enormous opportunity. We are in the middle of a technological revolution in which this country's method of democracy and capitalism has made it by a huge distance any other country in the world. Our unemployment is at historical lows. Obviously not low enough. For the 3% who aren't employed, that's not a good statistic. But what it means is that we have a growing economy in this country. What it means is that we have enormous growth. We have need for excellent people in the workplace, and we are going to have to re-educate and find unique and new ways to go into that workplace and retrain and bring people in. In Minneapolis, where our headquarters are, we have one of the lowest unemployment rates in America. We happen to also have a very large presence in Denver, and we have the same issues there. It is hard for us to be competitive and find people to come to work for us. And so we are forced by economic requirements and by demographics to find new ways to get people to want to work for us. Simple things like casual day, which if you'd asked anybody in our industry 5 years ago, the New York Stock Exchange now has casual day. I mean, people come and leave ice. I mean, these sound foolish, but the fact is that everybody is looking for ways to compete, and people want African Americans, Asian Americans, Latinos in their workforce. They will not survive.
Charlotte's point is that we have the growth, the wealth, and the prosperity at the most radical polarization since 1929. So that the growth, the wealth, and prosperity is extremely horizontal, vertical, and far less horizontal. And Charlotte's saying that there's a segment of people I saw Reverend Sharp News here run a campaign not long ago arguing that unemployment on that end of the zone is 10 to 12%.
It's much higher. In the city of New York, it's 9.3%.
Yeah.
And while the nation is near full employment, our entrepreneurs are seeking employees outside of the state. The difference between how this high tech and this robust economy can bring people with it is that you just don't stand still and think because your country is doing great that one day you're going to wake up employed. You need employment skills. If the system is failing you, unlike the former immigrant communities who came not much more intelligent but with much more hope because the system was there for them. If you know the system is not there, you're just going to grow old and poor. But it doesn't mean that because your country is doing great that you can expect one day that you'll be touched by it. This is especially so when our young people are attending more funerals than they are graduation. They would find out that short life doesn't mean too much to a kid. If the kid knows and has no hope or has no model as to how did he get out of it. So I think that we're not running the turn of the century type of thing that as the nation goes, so goes the rest of the people. You got to make certain, as Jesse Jackson has said, that that boat is not stuck at the bottom and as the tide goes, but there are weights on our children's ankles.
Irving,
My point.
because I see your hands up, because when y'all give it a Q&A, I want us to make a psychological shift. I'm going to ask you to do a big thing. The shift from childish whereas to therefore, what we're going to do about it. Because all of us have enough pain to recycle on the whereases, and it's all true, except it's not buildings on the uptown side of that river, Harlem, Hudson, or East. And those of you who are into finance, the urban policy we seek is in us. It's not going to come from the Speaker of the House, not going to come from the Senate. It's not going to come from yonder's place. We who are in the room, we must make the urban policy and design it. We've convened ourselves to put forth economic plans for inclusion through growth. Growth through inclusion. And so there is this challenge, once we kind of see it as Representative Rangel has laid it out to be. You who are running finance houses and trying to get there, what therefore, Monsieur, must we do? Don said he wants to, he needs incentives. Good guy, no hostility. He needs something he's searching for as we get this thing down. Mayor City want to do all the right things, right kind of guy, but can't do certain things. What are those certain, what impediments does he have that we must cut to let him be the mayor he really wants to be, or President Clinton to be the president he wants to be? Unless we cut those strings and describe that, we'll be waiting for a long time for it to come on the morning news. And since the morning news is here tonight, because they think we might have a thought, let's have one. Let's just wrap back and have one. Urban, then we're going on this microphone. Urban.
The only point I was making is that there is an economic driver that will require businesses to find new ways to bring education. It's not a philanthropic event. We happen in our company to give 5% of our income to charity every single year. That's our charitable effort. The rest of our capital we're required to make a return. But this relative unemployment, this requirement that we find the best people out there, is requiring us to train people in those skills that we can bring into the workplace, who will have a sense of loyalty to our company because maybe we trained them and provided an opportunity. And those are the demographics I was talking about. These new times are going to require that businesses, and I can only speak for my own and people I know, we are desperate for good, qualified, bright people. And frankly, they're not coming out of the schools with the skills we need, so we might as well train them anyway. And so we've got to get out there and be competitive. And I think this competitive environment that will exist, at least in the securities industry, is what I think is the most optimistic opportunity. Because once people of color, once these people who need help get into our business and have a greater voice, then they will cause more change to occur and create relationships that I think today aren't there. And that's the point I was trying to
Lamont,
make.
before Donald has to go, because he made a real commitment to his child and all of us about his schedule tonight, I want to ask you a question. As you were coming in, Donald was saying he'll build anywhere, and he will. Big builder on this end of the island. Wouldn't mind building uptown, but there are some things on 57th Street different than 125th Street, and there's some things. You're on this African Development Bank for South Africa. What could you do different from your bank, if you might describe it, that Wellington Webb can't do for Donald? What can you do and describe it so people know what you're talking about?
Thank you, Reverend. The entity the Reverend is referring to is the Southern Africa Enterprise Development Fund, which was established by our government, federal government, to promote private business ownership and development in the Southern Africa region. The seed capital for this enterprise fund was $100 million. And the answer to your question is we can do virtually anything. We have a great deal of discretion to invest in all kinds of activities. Many of the things that we have no comparable resources to do in places like uptown New York, Manhattan. I think that's the point you wanted to make. Now, what this fund is doing in Southern Africa is also being done through similar funds that have been established for Poland, for Hungary, and other places all over the world. So if you could move uptown Manhattan to South Africa, I could do a lot for you. Now, I must tell you that this is very confusing.
Or if we could move the Southern African Development Formula to Harlem.
Exactly. Exactly.
And I'm saying, what formula do you have from our government to develop Southern Africa or Poland or Hungary, as the case may be, that Wellington Webb does not have in Denver or that Utendahl cannot access in New York? What is in those formulas that would allow you to ally immediately with Trump that you can't do here now? What's in it?
Well, basically what happened was the President of the United States appointed a group of people.
How many of you?
There are now 18 of us. We started with a core group of 12 Americans. And he gave us $100 million, and he gave us discretion to decide how we wanted to organize ourselves. We created a separate corporation, and we, in effect, govern ourselves. I mean, we follow certain basic guidelines, but again, we have more flexibility in the use of federal funds than I've seen in many of the programs for urban America. The group the president pulled together was Andrew Young, who's the chair of the fund, Leon Sullivan, who led the Sullivan Principles battle in South Africa, Emma Chappelle, who's participating here. So people who had demonstrated records of success and commitment to the anti-apartheid movement in the United States that helped to caused about the democratic changes in South Africa. So he just, in effect, picked people who had solid financial backgrounds and experience, and some demonstrated knowledge and experience with the region and with South Africa. And he said, you guys figure out how to get this done. This is a general mandate.
Before the next speaker comes from the floor over here, I do want to express thanks to you, Donald Trump, for being with us tonight. We need your building skills, your gusto, your rent package for people on Wall Street who represent diversity. And we thank you for coming tonight. Let's give Donald Trump a big hand. A big hand for Donald Trump. Hey, Donald. Few brief questions from the floor, and we're going to take the mics for about 15 minutes, and then we're going to I believe that the issue of formulas and supports for development in urban areas answers on behalf of the issue. I'm a graduate of Harvard Law School. I reside in Prince George's County, Maryland, one of the 5 most affluent minority neighborhoods in America, yet there is very little development going on in PG County. Where opportunity for vast return on investment obviously exists. If we meet the formulas and tests, there why no development in the most affluent African American community in America. That's designed for you, Maceo. They're playing by the rules. Have the degrees, have the money, have the, why are they not attracting investment capital?
Well, Reverend, I think that we have a basic problem that we have to address, and that is that business in America ignores the African American community because we don't demand better. What happens is we are willing to go out and spend our dollars. We can have companies where we are disproportionate to our population share, where our population is 12% and we account for 25% of their revenues. And yet, in the case of, for example, the soft drink bottlers, we as African Americans account for 25% of the revenues of soft drink bottlers in America. We're one of the largest markets they have in the world. And yet, when we look at their boards of directors and see very few people that look like us, when we look at the owners of the bottlers, not only for Pepsi and for Coke and for all the rest of them, you see one in each system so that they can point to them and say, we have one. We have a problem because we are still going out there and buying those soft drinks. When we get to the point where we as a people will stand up and say, if I'm going to buy your soft drinks, you're going to do business with me, they will stop boycotting us. So what we have to do is we have to get the word out to our people that we have to organize and stand up. Lamont was talking about South Africa. Well, we also have a venture capital fund for South Africa, $120 million, U.S. We are the largest U.S. investment player in all of Africa. And we're a tiny black company based out of Durham, North Carolina. We also got assistance from the government. We went to the Overseas Private Investment Corporation. We raised $40 million in equity. They gave us full faith and credit, government guarantees, principal and interest for $80 million in bonds, which we were able to go out and sell in the marketplace at just slightly over Treasury rates, which leverages the return that our investors get on their $40 million in equity that they put up.
Can you get, Wellington, can you get that same deal for the development formula in Denver? And
Not
that's
a
basic.
chance. No, we were the 37th OPEC fund that they had done. They've had them all over the world, China and Russia and India and Israel, and I mean, you name it, they've been there. This was the first fund they had done for Southern Africa, and the first time they had ever done any business with an
Mason,
African
the reason
American
I
company.
keep driving this question of formula, is that biscuits don't rise just because you're hungry or because you paid excessive price for the flour or because it's right for you to have the right to eat. Biscuits on the rise when there's baking powder in the flour. Can I get a witness? My point is that no matter how much we put down this issue of formula, unless there is a development formula, then extraordinary effort will not compensate for lack of a formula. And what we're driving at during this conference is that there are development formulas for developing our allies, whether in Southern Africa or in Eastern Europe or as it were. I mean, the Marshall Plan was a formula, 50-year loans at 2% government secured. It takes some effort to fail with a formula like that. And the argument was that our allies needed their infrastructure rebuilt because it had been bombed out, and you could not have trade without infrastructure, and you could not get conventional loans and offer them to a bombed out people and say, we'll offer them some money, but they couldn't borrow it. Well, bombed out people couldn't use conventional rate money. And even if they could not transport the trade over bombed out roads and bridges. So that was a development formula called Marshall Plan, MacArthur Plan, but they were not considered as throwing money after something. They were seen as urban America's compelling interest, investment with the return being developing allies. The question becomes here, as we throw it open now, is this question, Wellington, of our driving it. So when we meet with Wall Street allies, or meet with the president, or meet with the Secretary of the Treasury, is that when they ask us what do we want, we can't say freedom now. Did y'all miss that? One time when I was in Greensboro, we were going to jails for sit-ins. We would go to Boyd Morrison's cafeteria every day, said we want to eat. And so he'd come out there big and bold. You can't eat here. So we'd stand there and say, but we're hungry. You can't eat here. But we are Americans. Can't eat here. We'd have a flag and Bible start saying we should overcome. You can't eat here. And so it was very dramatic, and the cameras was rolling, and he was acting a fool. We were looking all humble. So one day we went up there, and he stood back and said, well, come on in. It's enough of this. And we went on in, cafeteria style, filled up our plate, sat down and eat, and it was just having big fun. We had broken the color line at the cafeteria. And somebody said, well, you having money? And somebody said, no, man, I just came up here to eat because we was protesting. We went to jail that day without dignity. My point is, we're going to have the Secretary of the Treasury to come here tomorrow. We're going to have the Federal Reserve Chairman coming. President's coming. And we're in effect saying that the historic formulas that they have applied have not green-lined the red line zone, even when they were friendly allies. Now that they are receptive, the formula for this applying, what is inverting what you can do abroad and can't do here, we must speak in terms of formula with the rationale that provides for our government the rationale of national interest And for Wall Street, it's mutually beneficial and profitable. That shifts the debate from throwaway capital, unnecessary risk, and race-based. It shifts the zone to compelling national interest, mutually beneficial, profitable proposition. Is that not where we're trying to go? John? Somebody got to grab a mic now.
Yeah, I think that Lamont and Macy hit on it. I mean, they're talking about fund, private equity fund. I mean, when you think about the government and public and private sector, here's where they can join hand in hand. I mean, there is just not enough private equity targeted at urban America. I mean, Maceo pointed out the bottling industry. I mean, you can look at the fast food industry. It's absolutely ridiculous when you think that people of color consume almost as much as 25% more of fast food products. And when you think about where we are with that and actually how many fast food operations exist in, let's say, Manhattan alone, it's a ridiculous number. It's 1 to every, let's say, 6,000. Actually, versus the national average, you have 1 to every 36,000. 1 to every 6,000. Excuse me, 1 to every 6,000 stores stores per people, and up in Harlem, for instance, it's like 1 to every 36,000. It's really ridiculous. And like I said earlier, that you could put models out there right now in which the returns would be acceptable to corporations in the private sector, which they have alternative investment money. I mean, a lot of these very large corporations have equity dollars to put into a fund that could facilitate the opportunity for this formula I think you're referring to.
Thank you, John. Questions? Please identify yourself. Thank you so much.
Marilyn Pearson, First Vice President at Smith Barney. This question is for Irving Weiser. I applaud the diversity efforts, and I know a few years ago a number of the firms on Wall Street were covered by consent decrees by the EEOC to hire females, to hire blacks, to hire Hispanics. What I'd like to know is what steps are being taken to not only bring these people to the table, but to maintain them, to mainstream them, and to move them up.
Thank you. I'm not familiar with the consent decrees, and I can tell you of the things that I know about firsthand. And just I'd use, if I may, our own experience in our firm. We've had since for almost 15 years a Women's Advisory Council. It is a mentoring group that provides mentoring for the women brokers. This is predominantly for women in sales within our company. And it tracks their production levels, and it finds ways in which they can provide and share ideas, because unfortunately all too often there might be 1 or 2 women in a 50-person office, and people tend to go to where they find affinity. We've done things like schedule conferences twice a year. I think we do it. We pay for it. We have used the same thing now in the formation of an employee association for people of color. And we have tried to learn some of the learnings out of that group. I know that the same is going on. I know that Payne Weber has started a very aggressive program that recognizes and understands that it is not good enough to bring people in the door and have them fail. And I think what we all have to understand, and I don't mean to purely make it an economic issue, but take a person that goes through our training class as a broker. It costs us in the first year, as you well know, probably $50,000 to $60,000 to train that person, which is what we pay that person before they become productive, plus the housing we provide when we bring them into Minneapolis or into a region to train them, and the trips back and the cost of the training. That's a big investment for us. And we're not doing a good enough job in providing the after training to make sure. So I think that, that many of the firms are taking this issue on by learning from other things they've done in other areas. That's certainly true in our firm. And I think the whole idea of retention, and I apologize, I keep losing sight with you there, but the whole idea of retention, it's an understood business necessity. And we've got to do a better job of retaining the people we get.
Thank you.
Hi, Marcy McCall, New York City. I have a question about the partnership between government and the private sector. We had a development that was actually pulled out from underneath us, the Harlem Trade Center. That would have brought Harlem a lot of money. It was a multi-million-dollar project that the government up and pulled out for us. How do we convince the Donald Trumps of this world that we're willing to form a partnership, we're there to work with you, and this can become profitable? Because if that center had been built and had succeeded, which I believe it would have, we would have changed the whole identity of Harlem. However, we don't have a government that's willing to support us. So how do we form the partnership, I guess is the question.
Which government is that, Charlie? City, state, or local?
Let me make it clear that that Harlem Trade Center concept was formed by former Mayor Dinkins and former Governor Mario Cuomo. And it was abundantly clear when Giuliani came and Pataki came and saw our community with that money in escrow, and Percy Sutton was chairman of the then Harlem Trade Center, that they then decided how they were going to get that money and redistribute it. And they actually came and did it. Tragically, with some of the support of our community leaders, as a matter of fact, the pastor of Abyssinia Baptist Church, now that I recall, voted for that. I forgot his name, but these things happen.
Reverend Butts.
Reverend Butts. And it's tragic to see, just like in Amistad, that it wasn't all just them that did it.
I don't understand, Charlie. I'm trying to get to what do you
A
say?
community that's being politically raped just because we lost the election is morally wrong. But if they can pick out restaurant owners and pastors of churches and say that we want you out front to say that these are the things that are good. So they took away the trade center and promised to use this money to reinvest it in the community. Since that time, not one nickel of that $80 million has been reinvested. But I understand that Abyssinia does have a redevelopment project that they just received 2 weeks ago. And so...
Charlie, let me flip this another way, because I want to keep this on a plane that's going to benefit us beyond the night, because the engagement with our other allied markets that are less productive than our market, not as big as, not as close as, our Korean market, our Polish market, as it were, is not left to petty political whims. Those formulas outlast the changing of the guard. And I thought that's where you were driving us, is that what can happen for us to have economic formulas that drive us past the whims of a given political guard, because it's in our compelling interest to do so. That's why I raised the point, should not the corporate leadership drive this by profit incentives and not just be reduced to party whims?
I don't think it's a question that
But use the mic, please.
Democrats are freer than Republicans. The question is that we have not been able to use our political power in order to get the things that we deserve. And it's abundantly clear that it was an economic rape of an investment that had been made 10 years ago in our community by people who just had the raw power. And I cannot begin to tell you the things that we lost as a result of losing the election with David Dinkins. The whole empowerment zone concept, and $100 million to be put up by the city, $100 million by the state, and $100 million by the federal government, which has since increased on the federal government side, was a contract that was made with Dinkins, Cuomo, and Clinton. And if you don't have the power to go into these agreements by the sources back home, it's just not going to happen. So when we lost $80 million from the state, they gave back $10 million to the empowerment zone. I think it's a question of who's in charge and whether or not we're using our political power in our communities to benefit us. But if you're looking for government to be a partner in this, it's who influences government. Obviously, the Polish American community was better organized and more in sync with their colleagues in doing it than the African American community in Harlem was able to do.
Yes, ma'am.
Benita Greer, president of Cromwell, Miller & Greer, security brokerage firm on Wall Street. Reverend Jackson, you asked a question about the formula. I want to expound on what Maceo had started saying. Basically, the formula starts with the African Americans. In order for us to sit down at the table, you have to bring something to the table. I mean, if we go out and buy a home, you know, you just can't buy a home without putting some equity down. So we have to start with the grassroots and basically start, as Maceo said, you know, we are consumers, so we go out and buy all the sodas that's out there, but what we have to do is start investing. Some of that money that we put in and buying, we start investing in the companies. I mean, you can't expect to sit on a board and you don't own any shares. Now, what we have to do, we start basically with ourselves, you know, get out of debt, you know, that's the first part of the formula. You know, take 5 years to save to get out of debt. Then, in the same time, we start putting money away. Start with an investment club so you can get educated about what this finance is. You know, a lot of us are just afraid of Wall Street, but basically, that's a very simple thing. I mean, we are consumers, just turn around and be investors. So you as an individual start an investment club. You start with your family, you start with your churches. Now, if you're coming to the table with $100 million, somebody's going to listen to you, not just going to the government asking, well, what are you going to do for me? You have to start, and the way we start is first get out of debt, consumer debt, credit cards, just blowing money. Most of us in New York, if we walk out of our house on a weekend, we can spend $100 walking 5 blocks. Now, you know, we go, basically if we eat lunch, that's $5 a day. If we stop eating out and bringing our lunches and saving that money, that's $25 a week. And that's $100 a month. So basically what I'm saying, economically, we have to start, the formula would be get out of debt and start investing and bring some money to the table so people will listen to you.
Let me say this. I want to make certain, that even though this is a family meeting, we're on C-SPAN, and somebody might not understand the context of what you said.
Okay.
Because I said at the outset, there is no race gap. There is an investment gap. There is a historical legal gap, and there's a trade gap. And then we must forever keep those gaps in context. For example, for the first 250 years we were here, we were commodities and not people by legal definition. But then, worse than that, for the next 100 years, the Homestead Act was a white affirmative action program. Millions of acres of land, and then the building of land-grant colleges by the government. The railroad industry was determined to be compelling interest over institutions like Illinois Central. The government gave them 6 acres of land, 6 miles of land on both sides for thousands of miles, the government. The oil leases are government leases. Now, all the Coke franchises were given out. We were ineligible. There's one now that comes from a boycott in 1980, and the Pepsi as well. There's one because Coke has one. This is very basic, it seems to me, to understand that it was the government that did the research for the radio technology industry. That was not a private deal. And once the government worked it out, they then let the channels to all white owners. Not by SAT score, not by saving lunch money, but they gave them out. And then that industry led to the TV industry of '48. The government then, since there are no government channels, they gave them away too. We must put the government's role in context of creating this massive legal structural chasm gap. It must be some factor in bridging the gap it created. The case we're making now is that it will gain more by closing the gap than it will by extending the gap. But we must never, it seems to me, let the government that we subsidized with labor without wages be absolved of its responsibility to invest in our infrastructure as it has in infrastructures here and around the world. We should also be more frugal spenders. We should also avoid bad habits and drinking and smoking. We should also do those virtuous ethical things, but the only reason I raise that within the context of family is that there are those in radio land and TV land who live off of the privileged prerogatives of those government gifts, who themselves are focused on inheritance taxes while we focus on affirmative action, who feel much too comfortable with the work they did not do. And so let's put that in perspective. And Wall Street must partner with us not only because it's profitable, but because the earlier investment firms were founded in the South. They were founded on shipping and textiles. And we were the energy that drove the shipping and the textiles. So we have been to Wall Street before, but not at the 106th floor level. And so what I'm trying to do now is to re-engage Wall Street in a reciprocal, mutually beneficial trade deal, one that ties in government, private, personal partnership. I'm being respectful, you know, I'm not trying to, you expect me to what I'm saying is that at the end of the day there must be some combination of our own personal frugality and private investment and government. The formula must include all three is my point. And I sense now as almost a wave in our community, we've become so cynical about government. We will not vote for a government that will protect a Harlem investment because we say we live in our faith. But we live in our faith, but we live under the law. And faith is no substitute for law. People of faith fight for just law. And we must keep in context faith and law, private habits, private investment, and government obligation, those three. Can you appreciate what I'm trying to say?
Right, and so basically what I'm saying is that we incorporate all of those together.
We're
Basically,
together.
we're working individually, Wall Street, the government, we have African-American officials, but we have to come together. As African-Americans, we've been instilled, if you go to school, get a college degree, you can be successful, but what we have to understand is political, it's economical, and it's political, economical, and the government, and we bring it all together as one instead of individually. So we have to develop the economic part too as part of the formula.
Thank you, dear. Yes, sir.
Thank you. William Cannon, Equality Employment Options here in New York City. My question is for Mr. Weiser. Your comments earlier about the importance of recruiting qualified people into corporate America, people of color, was well noted. I wonder if you can just take a moment to elaborate further on the importance of not just recruiting people as managers and mid-management level, but also the importance of recruiting people at the upper echelon levels and board members. The second comment I'd like to make that I think is commendable, that the mayor of Denver can be here, but where's Rudy?
No, let's don't go there. Please, no, because we don't need him to figure out where we got to go. Really, don't clap, because I want us to remain focused.
Absolutely.
Because the president there makes somebody who's absent the issue, and not us who are present the issue. This is about us figuring out where we can lead ourselves in the nation. And if we get sidetracked, friends, if we do get sidetracked, we'll end up. There are people who want to make of this meeting something frivolous. They want to discuss something other than money and investment and trade, The more that we focus on that, then we reduce the likelihood that people who are frivolous, will do injury to the dignity of our mission. Please accept that spirit.
Absolutely. It was not my intention to do that. I just wanted to commend. Thank you.
Yeah.
The question was with regard to board membership and senior management. Again,
Talking to Mike,
I can't speak for everyone in the industry. I can tell you that qualified board members, qualified senior executives, people who represent the African American and other minority constituencies are the most sought after people in business. And the question becomes, at what point, let's just deal with executive levels. If I look at the people, let's just talk about the people that report directly to me, on average they have about 20 to 25 years of experience in business. They have probably 20 years in our industry, and the average with our company is probably 12. So that's not an excuse, it's merely a statement of what some of the qualifications become. So unfortunately, and I'm only again speaking for my industry, and I think yours actually, we don't have as many people in the talent pool for the positions that you're speaking about in senior executive leadership. But I think what's happening is that there is an enormous growth of people coming into the industries at all levels, and I know that there is a desire to have the process move more greatly and with much greater speed. But I believe that that is a trend that will continue to derive substantial focus. It's just very difficult in the context of a business environment to take someone, irrespective of what their background is, who doesn't have either some of the experience and or requisite skills to do the job. And I don't think anybody wants to do that. The only other comment, and it's on a little slightly different topic, and it relates to this issue of partnership that has been spoken about so many times, which we would advocate, I would advocate. My understanding is of partnership, whether it's a marriage or a business partnership or a coalition of people, is it starts with everybody understanding what everybody's needs are and what everybody's skills are and what they bring. And I continue to go back to the point, let's use this center in Harlem, I'm not familiar with it, but I will tell you that if that partnership were originally created with business in there, where they had the economic incentives we talked about, you can rest assured that the business would not have allowed $8 million to go out from under it if it would have caused the business side of the investment to drop. And my only point is that we recognize that when business comes to the table, and take my business, we have $50 billion of our clients' money to invest. They don't ask me to make social investments for them. They are measuring returns. I have no right to do anything other than to meet their financial objectives, not their social objectives, unless it's somehow segregated. So the more we can understand and appeal to that business requirement and use other forms of community subsidies or community involvement or other ways in which, I don't mean to quite say it this way, but get business committed on the front end to where they can achieve their goals, they will then be their partner and fight for you, because then the destruction of that base or economic subsidy, if you will destroy their investment.
But Irving, you see, but the other point, though, is if you use a 25-year timeline, then gates would be eliminated.
I'm not proposing 25. I think it's shorter.
20, 15. My point is that these board relationships have an awful lot to do with people you know and like. And if we get to know more of each other and like more of each other, that's a piece of this interaction situation, because by and large people partner with people on a whole different set of arrangements, and I submit to you that there is no shortage of qualified blacks even here to serve on these boards. And what has happened is that because of this cultural gap, this communication disconnect, is that we often have people who don't know but about 10 black people, put all of them on the same board, and don't have an appreciation that beyond Jack Robinson, there's also Hank Aaron and Willie Mays and a whole bunch of other people back there. I remember we were confronting R.R. Donnelly sometime this year because among other things, didn't have a black on the board. And they were very sincere. They just could not find one in Chicago. They couldn't find one in New York, they couldn't find one. You know, it's a publishing company, you know, Dulles, except 6 blocks from their headquarters, and they're on the south side of Chicago, is John Johnson, who has been publishing with them since 1945. Every ebony is published by Dulles, but they still could not find a qualified black on that board. And there's no one on that board whose distinction or wealth compares with John Johnson. And my point is that as we look for partners, there is a pool of partners, and we must expand the appreciation of Wall Street and that pool, because it will grow lazy or recycling a few people for cover and not a lot of people for growth. And there are people who can contribute as growth partners, not just as covering partners in the process. And that's why us getting to know each other better is another reason why we're coming. And then we're going to take 2 more on both sides, just 2 more, and then we can socialize and talk, because we really want to be on time tomorrow morning for the session, which I'll describe, 2 on both sides after Maceo.
Yeah, Reverend, one of the things that we need to make sure that everyone keeps in mind when you talk about corporate boards. I sit on several corporate boards. I sit on some Fortune 1000 boards. And I can assure you that every white individual that sits on those boards is not competent. What we are expected and what is demanded of us is that the only people of our race that get an opportunity to participate as corporate directors be the superstars. You have to have read every piece of material that is sent out to you. I catch grammatical errors in the things that are sent out to me for a number of reasons. One of them is I want everybody to know I read the stuff, so there'll be no question about it. So nobody even questions it anymore, because they know if there's a typo in it, I got it. Not to mention if some of the logic doesn't make sense, I really eat them up then. But all the people that sit on corporate boards are not superstars. There's some people that sit there like bumps on the log, never say a word, never read the material, just show up for the meeting, sit there and collect their check and go home. And they're on there because they don't make waves. Well, when you put a black on the board, he's got to be a black superstar. And to say that we cannot find qualified black people in this country that are worthy of sitting on corporate boards is a thought that we have to eliminate from the thinking of corporate America. Because there's nothing that could be further from the truth. We went to the same schools as the other people that sit on the corporate boards. We normally made better grades because we stayed, and if we don't, they put us out. I know we had to work harder to get there, and we came out with the same level of education. Now, it is true that in a lot of cases we don't have the same level of experience in the big corporations. That's because if you don't let anybody get promoted to the top echelon, you never learn how to be in the top echelon. But everybody on a corporate board is not a CEO of a Fortune 500 company.
2 and 2.
Lloyd Grant, the publisher of the KIT Business Report, which is a newspaper targeted 25,000 black business owners and professionals in the New York, New Jersey metropolitan area. And I want to say something that's not very sexy. Small businesses employ most people in America. They hire the workers, they train them, they pay the taxes. While it would be great and sexy and have immediate impact to have Donald Trump come to Harlem, to the South Bronx, or to Flatbush, to really get sustainable long-term growth, you need to have more of the little guys. You need to release the entrepreneurial fires that are pent up in the black community. So the little guy comes out and hires 5, 10, 20, 30 people, like Chandler Lee over there, who has a car dealership, employs 30 people, or Benny Hadnot, who has a accounting firm, employs 40 or 50 people. Those are the businesses that create sustainable long-term growth. You go into their offices and you look around and you see people that look like us. That is how you're going to rebuild the inner cities. To do it, we need to have more access to the equity markets, capital markets. We also need to have the barriers to getting into the door of the corporate market broken down so you can get into the corporation and at least compete for goods and services.
Good, that's what we're trying to have, this combination of that driving zeal within the entrepreneurial spirit and access to those who, in fact, last year, 10 of our car dealers came and they were from General Motors. They were on their way out the door. Some of them are here tonight. And by a certain set of standards, they were gone. We have bought, Rainbow Push has bought stock in 50 corporations, one of which is GM. I called the chairman and said to him that many going out of business suggested something systemic and not just something personal, and would he consider a moratorium on foreclosures until we found out. But he made a judgment to do that, to declare a moratorium on foreclosures, to refinance them and put forth a system to evaluate what was going wrong. Well, in his searching for it, he found problems that applied not just to small black dealers, but across the board. But only Jack Smith had the power to, in fact, bring that system to a halt and give them a second lease. So it takes some combination of access and that drive to make the thing happen. And our being here collectively gives us a level of access to hook up with the entrepreneurial spirit that we have not historically had in this focus. And so I would hope that during the course of these 3 days, that as we rub shoulders with each other, that we also meet with those, in fact, who have the power to give us the latitude we need to survive.
That's absolutely true. But also, you know, you can bring the Gap into Harlem, and that will create some impact immediately. However, there can be a takeover a month later. New management comes in with a new focus and new strategy, and they can decide this wasn't a good idea. It wasn't a good idea for Disney to be here, and they could be somewhere else. Small businesses, they grow, they pass on, like Mr. Sutton has passed on to his children, inner city, and it's created and has created sustainable growth in business.
One thing I hope that we will do during the course of this is talk about partnership. We should not invite people in to take over. We should invite partnership, and that becomes a sustainable factor in the formula. I want to thank you so much. One.
Hi, Regina Illery, Black Education Network. This question is for the CEOs of the major corporations. And most of the black media in this country rely on advertising dollars for their capital. Most of the commercials or the advertisements that black media get are feel-good commercials. You know, during Kwanzaa, you get Happy Kwanzaa, or you know, we celebrate Martin Luther King Day. What will it take to get, you know, the hard commercials, you know, the year-long accounts to support black media?
Tom Burrell? Yes, Tom, you're the ultimate advertiser. Answer that question if you don't mind.
Well, you know,
Just 1 second, please. Tom Burrell, give Tom a hand. Tom Burrell is one of our premier advertising agencies who wrestles with that question, you know, year-round and forever.
That is a question that we've had to deal with over the last 26 years that we've been in business. Going in the history of advertising, it started off with this whole notion that companies would make black people feel good by just basically addressing those special events and those occasions. Through the work that we have done and some of the other agencies, we have demonstrated to major marketers that the black consumer market is a valuable entity that deserves serious consideration. And what we need to do is we need to continue to stress that point and to get that point across to industry, and in particular the financial community. We have had the opportunity to work with an outstanding black company, Ariel Capital Management, Ariel Mutual Funds, and do advertising for them. We talked earlier about the need to educate and motivate black consumers to get involved in the investment community. We missed out tremendously in the last 2 or 3 years when we've been achieving this 22, 28% growth. I mean, we weren't a part of that. And we had our money in CDs and in bank accounts, while the rest of the world was achieving double-digit growth. And
that's a loss to the financial community, and it's a loss to the black community. And what we've been doing for aerial capital management, we ought to be doing for the major investment operations, and not just relegating advertising to black consumers to those special occasions like Kwanzaa and Black History Month. And it's a win-win situation for everyone. And certainly one of the reasons we're here is to make that point that there ought to be a more concerted effort on the part of the industry as a whole and through the various individual companies to market their goods and their services to the black consumer market for increased profits.
Brother Tom, let me say this to all of you just on the matter of the business, because I don't want to violate you last two, but I really can't, and I'll explain why. One, we're going to take a short break. Drew Hill is going to entertain us tonight. I want to thank Brother Hiram Hicks and Brother Clarence Avant for making that possible. After all, entertainment's a part of our industry, and they have been gracious enough to be with us tonight and to be supportive throughout. And then we have to be out of here by 11 o'clock, though the cost escalates, and that's the business of the matter too. Plus, if we get to enjoying it too much, we'll be too late for the breakfast tomorrow morning. So there's a lot of compelling things here. Let me make several observations. Number one, tomorrow morning at 8 o'clock, the breakfast begins in this room. Please gather if you can, 7:30ish tomorrow morning. After Dick Grasso, New York Stock Exchange head, greets us, and Mr. Diamond from Travelers, our first speaker will be the Secretary of Treasury, Mr. Rubin. His area, of course, encompasses Community Reinvestment Act and this whole question of banks and access is a part of that domain. And then a leading executive at Ford Motor Company, Jack Nasser, in the paper reported to be the heir apparent at Ford, will address us immediately thereafter, given the size of that industry and what all it means to us in professional services and the range. Then we break out into workshops. These are very significant workshops to which all of you have some kinship, whether it is money management, telecommunications, public policy, where Mayor Wellington Webb, Mayor Willie Brown, and others of them are involved. And at noontime, I will address you. At 2:30, President Clinton will address us on tomorrow. And then there'll be workshops after that. And at 6 o'clock, we have our fundraising reception on the floor of the New York Stock Exchange on tomorrow night. That's a black tie or waiter's jacket. Some of you might say it's black tie. I mean, it's like a waiter's outfit. And it's the same principle. But tomorrow night at 6 o'clock, we'll have our reception, a night out with trading partners on the floor of the stock exchange, and Sister Roberta Flack will provide the music on that occasion. It's really, it's called a night out with trading partners. It's a chance to get to meet people that we would not meet ordinarily, which includes many of us meeting each other in ways that we would not meet each other ordinarily, as well as dimensions of corporate America. And then on Friday morning, the head of the AFL-CIO, John Sweeney, will speak to us, in part because if there is a revitalization of urban America and its infrastructure, labor will benefit. If there is a new effective use of pension funds, labor will benefit. And we're going to talk tomorrow about an effective, secure use of pension funds and the right use of them in community reinvestment. And then there'll be workshops, and then Arthur Levitt will speak about diversity in the securities industry, 11 o'clock-ish. And then Federal Chairman Greenspan will speak at noontime. And then there will be workshops in the afternoon, information technology, boards and some other area I forget just now. But I want to express my thanks to you for your coming from around the country, addressing a big theme, how to democratize capital, how to reinvest in America, how to green line, red line zones, how to expand the trade market, how to invest in Wall Street, not just invest in low yield investments as in an S&L, for example, as opposed to stocks. Those reigns of serious subject matter. And then we want to leave here and go to about 10 cities as a follow-up. We will have a major all-day trade investment seminar in that city, say Denver or Detroit or Atlanta or Chicago, as the case may be, where we began to find trading partners on the Wall Street of that city, Peachtree in Atlanta, or LaSalle Street in Chicago, because most of us are not doing business on the Wall Street that we came from, not to mention the Wall Street here in New York. This, in many ways, is a symbolic street of corporate and investing America. And we then intend to set up some criteria where we begin to measure our allies by their investment portfolios, not just by the Kwanzaa or other symbolic celebrations. We want to translate relationships into equity. I want us to join hands and bow our heads in prayer. And then when we will have prayed, then we're going to socialize for a few moments while Drew Hill is gathering. Please, on tomorrow morning, please, I'll put you first on the mark for the minus, okay? No disrespect. We'll do it tomorrow. We want to, and that because there'll be sessions like this, and when I think when Mr. Rubin speaks, there'll be Q&A and the like, so we'll have a lot of it, okay? But I'm trying to outrun this timeline situation now. I want us to join hands and bow our heads in prayer, and then we'll take our break. Accept our petition, O God. In this high place tonight, we are so long from where our journey started. And yet, through much effort and sacrifice and risk and daring and perseverance, here we stand. Here we stand to heal the breach, to make this a more perfect union, to weld the crack in the Liberty Bell, to realize the dream of a one big tent America. All of us have equal protection under the law and equal opportunity, and we'll lie down with lamb in the valley, and there'll be peace, and none will be afraid. We thank you for allowing us to come together to tear down ancient walls of fear and culture and law and money and misunderstanding. Replace those walls with bridges where we can share the sunshine and share the growth and the prosperity and the wealth together, for this land is our land. We marched enough, worked enough, bled enough, died young enough, sacrificed enough, and now weeping has endured for many nights. And let joy cometh in the morning, yes, even this morning. Amen. Love you.
Good to meet you, Percy.
All of you, I made just one mistake. All of you who have a business card, shh, before we take this, Charlie, you want to say, shh. All of you who have a business card, please submit your business card. Sister Doris Davenport is all right. Please give us your business card tonight. Please leave it over there. Thank you very much.
like